Xerberus is building a risk and asset management blockchain, and in this video, I'm going to tell you guys everything you need to know about what Xerberus is, what they're trying to achieve, their Xercher NFTs, and their upcoming Xerch sale. Without further ado, let's get into it. First things first, what the heck is Xerberus? And I'm proud to say that Xerberus is not like any other projects that I really see out there, but is instead doing something very unique that I think has some potential. Now, to kind of start it off here, what they're trying to do is build the risk and asset management blockchain. They want to power your portfolio with machine learning, easy, fast, and built for the future of finance. And essentially what they're doing, guys, is that they're taking all of this on-chain complex data. They have all this machine learning and software that analyzes that data, and then they translate it in a way that people like me and you can actually understand, and they give these sort of risk ratings to different cryptocurrencies out there. And then based on these risk ratings, we can potentially make more educated decisions on what we actually want to invest in when it comes to the crypto space. They've been building in the ecosystem for over 2 years now, first starting with Cardano, but they've actually already added Ethereum, Polygon, and also are working on integrating Arbitrum. These risk ratings are at the core of everything they're doing at Xerberus because they can use all of this on-chain data and all this analysis from these different machine learning models to actually be able to provide services and products to the wider ecosystem. So for example, they have built an Oracle where they can get real-time reporting on all of this information. So the decentralized Xerberus Oracle network provides transparent, quantitative, and real-time reporting across crypto markets. And this information can now be integrated into different dApps and DeFi protocols out there so that they can get actionable data on how they want to mess with collateral on their lending platform, how they want to set different leverage pricing or options pricing, how they want to actually manage the risk of their different assets that they're holding. And what's interesting here is that they are going to have a fee for using this Oracle. So if some sort of lending protocol wants this data in order to better set their collateral on their site, now all of a sudden they have to pay in stablecoins over to the Xerberus protocol. Another really interesting thing with these risk ratings is that they're able to also have these token vaults that can automate transactions in your portfolio based on different risks. So for example, I can have 10,000 ADA that I just put into some sort of token vault, and now I can say, hey, I only want to invest in A-rated risk projects. Or hey, if a project goes from A rating to B rating, I want you to sell that project. And it's able to get all of this on-chain data that we might not be able to understand, and through its different processes and through its algorithms, it'll be able to help us make better decisions and sort of automate our portfolios. And they're going to have these different indexes, almost like the S&P 500 index, for example, where you can now all of a sudden be diversified in all these different assets and have data manage your portfolio rather than your human emotions. The final thing that I found pretty interesting that they're doing is their Siren, which is a scam recovery tool. Since they're tracking all this data, they can see where all of these different transactions are going, and they're going to be able to monitor where money is actually flowing, and if there's different scams out there, they'll actually be able to track where that money is flowing into, all within their own product. You can actually go to their site already and see their different risk ratings, their market caps, the wallets, and you can also look at much more advanced filters, such as how long people have held an asset in general, wallets that are whales. You can look at the diversity of the wallets, the number of wallet senders. I mean, there are a million different things that you can do, and they try compiling all those advanced filters and give that overall risk rating as well as how much they think that specific coin can grow. Now, you're probably wondering here, okay, well, how is this an actual blockchain? Why are they saying this is a risk and asset management blockchain, and how do I actually get involved? Well, the first thing is they have their Xercher NFTs. These NFTs have been around for a while now, I think almost 2 years ago now, and they're currently sitting at a 4,000 ADA floor. And what's interesting with these NFTs is not only are they going to get an airdrop, but they also represent ownership in the actual DAO LLC that they're incorporating. So each of these NFTs are actually going to represent ownership in their company as well as get an airdrop. But the biggest thing is that these are also the node licenses to help compute all of this data for their Oracle. So essentially you have these different nodes. They're going to have their Xer token, which these Xer tokens can stake to these different nodes. Once you're running the software, the nodes, and you have a server set up, all this stuff like that, you're now going to be able to handle these different computations, decentralizing the whole network almost like it's its own blockchain. And then what happens is whenever these different companies or products or dApps want to get this data, they're paying in stable coins for that data, for that API, and that revenue is shared amongst all these 768 nodes. And then these node operators can determine how much of the rewards they want to go to their Xer token. So essentially these nodes, as well as the Xer token, not only represent ownership of the actual company, but they're also able to generate revenue from all of the fees from the service and product that they're providing. Overall, Xerberus is a really interesting project, and I've been paying attention and talking to their team for a long time now. And they were actually nice enough to give us 5 of their Xercher NFTs, right now worth about 20,000 ADA, for us to raffle off with the Jelly token. So on November 2nd, we're actually going to open up this raffle, and we're going to be raffling off these 5 Xercher NFTs exclusively using our Jelly token. Each of these tickets are only going to be $5 worth of Jelly. It's going to be going on for 2 days, and you have the chance of getting one of these Xercher nodes for, instead of like $1,500, $1,600, instead maybe only getting it for $5. So if you want to participate in that, make sure to follow our Twitter. I'll have it in the description of this video. And we'll be hosting that raffle on our actual Jellypad site. If you wanted to participate in the actual Xer token sale, it is going to be happening November 11th. The tokenomics and sale details aren't public yet, but if you want to participate, make sure to follow their Twitter for additional updates. That pretty much wraps up this video. Hope you guys enjoyed it, and I'll catch y'all later.